All right, let's call to order this meeting of the Knox County Audit Committee. Today is Tuesday, March 19th. And Kim, would you mind calling the roll, please?
Jim Morrison,
Here.
Matthew Warren,
Here.
Commissioner Richard Wheeler,
Here.
Commissioner Jay, Commissioner Schoonmaker.
Here.
We have 4 members present.
And Kim, if Larson makes it in before we're over, just kind of make sure that, I don't know if you
Yeah,
changed
him
that in
present.
who's here on the minutes, so. And speaking of the minutes of the previous meeting, I assume y'all have had a chance to look at those, and do we have a motion to approve?
So moved.
So we have a motion and by Wheeler and a second by Schoonmaker, so it's good to go. Either, okay. Just in case. All in favor say aye.
Aye.
Opposed? All right, it passes. And did I get out of order here? I think I did. We got to do the Pledge of Allegiance. Ms. Commissioner Wheeler, if you could lead that, please, sir.
Please stand and face our nation's flag and join me in the Pledge of Allegiance.
States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, so this is our second meeting in a row, for 2 months in a row. We hardly ever do that. And both times I've gotten the Pledge of Allegiance out of order, so I'll try to keep it a little better from here on out. So, item number 5 is Knox County Finance Department with Chris Caldwell, and I think he's going to give us a brief one. Unless he's got the CAF for memorized, though, he could do that too.
Memorized, yeah. Chris Caldwell, Knox County Finance. I'll keep this brief because you'll have a really hectic agenda. So I'll focus on current property taxes for today. So as of last week, current property taxes, we'd already brought in more than we had all of last year. And so that is a positive from a budgetary standpoint. We're like through yesterday at 99.36% of budget. So that is going well. We accrue through August. It does slow down between now and August, as we know, but trending in a good direction there. Haven't received what I call January sales tax yet. It probably should come today or tomorrow, but we hadn't saw it as of today. But from every fund standpoint, ultimately, revenues and expenses are tracking like you would expect. And kind of as we get into 25 budget, that's more of a constant thing. But for us, we are spending this time to prepare the budget, and that's where our focus turns after the ACFR, of course. And but things are trending, flat, but still in a positive direction. So I'll answer any questions. If not, I'll turn it over to Ron.
Any questions? All right, thanks, Chris. Hi, Ron.
Did I get it?
That got it.
We have a similar report. We're tracking, we took a look at February. We're still tracking according to about this time last year, both regard, but a little bit ahead in revenue, maybe as a percentage to budget. We're about 69% revenue actual to budget. Last year, maybe about 68%, tracking a little bit ahead. And with expenditures, same thing, about 60, 61, 62%. Nothing really unusual so far going on, which is, it's kind of a boring report here, but Chris, one time Chris said, when it comes to financial reports and expenditures, boring is a good thing, So
Yeah.
we're tracking fine there. I'll just mention something with sales tax. That's the one we always have our eye on particularly. we're running about 4% more in actual collections than we were this time last year. Which, at least it's better, right? It's not, but you got to remember, the 2 years previous to that, we ended up at about, gosh, I think 14 or 15% higher than the previous years, right? So you can see it slowed down. It's still positive. We budgeted really conservatively, so that's helpful. So we're running about 6.5% better than actual to budget, right? So we're projecting that towards the end of the year, and of course, you know, it depends on, there's a lot of activity yet to be posted, but through 6 data points, we're doing pretty well. Love for it to be the growth that it was in previous years. It's not, but at least we're going in the right direction.
Any other questions of Ron? I've got one, but I may wait till the next meeting to ask you.
Not a problem at all.
Okay,
Thank
thanks a
you,
lot, sir.
Okay.
Okay, now we are, I think, the star of the show today is Chris Holtz with Pew and Company.
All right, yes, I will be Ted Holtz, Pew CPAs, Knox County, Tennessee. I will be a little longer than the first 2 speakers. I will go over the governance letter, and I will also go over the single audit compliance report. We will start with the governance letter. A few sheets into that PDF will be at the very bottom of, will actually be page 1, which will be required communications. That's where I'm going to start in the governance letter. It first describes our responsibilities with regard to financial statement and compliance audits. Also describes an overview of the plan, scope, and timing of financial statement audit, or actually references the planning stage governance letter that we went over in the fall. And we'll go over one of those again, probably our next meeting for the 24 audit. Next, accounting policies and practices. Included in there is a section for any new accounting policies, and there was significant new accounting policy during the year that deals with what we call SBITAs, or subscription-based information technology arrangements. And basically with that, we're required to capitalize such arrangements, similar to how we treated leases a year ago. There are other accounting standards that change. All of those are referenced here to the actual ACFR. None of them were significant besides the SBITA.
What's an example of that, of the subscription-based technology? I'm just curious.
It would be an agreement, really generally for software, that's going to cover a period of time. So it's normally going to be software related.
Okay. Didn't know. I know it's not Netflix, so.
But
Okay, he's on page number 1 at the bottom. They're trying to follow you. Which
okay,
page number you're on?
at the very top of this page, it says required communications. It would be the first page that has any information on it. It's in the governance letter, not the compliance.
He's doing the, I forget, he's doing the PDF, I believe.
Okay. Are you there? Yes, sir. Okay. Okay, we've gone over the first couple sections. At the bottom of this page 1, report page 1, discusses audit adjustments and uncorrected misstatements. And in a moment, we'll go over, we have a few recorded audit adjustments. They're on page 6 of this document. Like I said, we'll talk about them in just a moment. On page 2, there's other information in the annual report or the audit report that wouldn't necessarily be in other, like in a commercial audit or a smaller audit report. This includes the introductory section and the statistical section, which are unique to a governmental ACFR report. The following section deals with observations about the audit process. And here, there are several captions here, several areas, and we had no disagreements or difficult matters to address. We identified one significant issue, and that really was just the adoption of the GASB Statement Number 96 on subscription-based information technology arrangements. Just as we were in the initial planning stage governance letter, we are required to reinforce responsibilities for independence, both from the firm's perspective and the county's perspectives, and they are listed below. On the top of the following page, page 3, is mentions internal control and compliance matters, and this references the single audit compliance report that we're going to shortly go over. And the last section here on page 3 references that there are written communications between management and the firm, and that specifically in this case is the management representation letter, which is, for your information, is attached at the back of this letter. Page 4 and pages 4 and 5 go over significant accounting estimates, and I believe identified 5 of these that are significant in particular to Knox County. And for each one, we identify what the accounting, or list here what the accounting policy is, what management's estimation process is, and the basis for our conclusion as auditors. And that's listed out for these 5 areas: fair value of investment securities, depreciation of capital assets, self-insured health care and workers' comp claims and general liabilities associated with them, then net pension liabilities for defined benefit plans and for other post-employment benefit plans. So, on page 6 goes over the recorded audit adjustments, and I think what I really want to point out here is that there really was no impact on net position or fund balance from any of the entries that we made. They really were reclassification type entries. So even though some of the numbers are significant, they did not, and the numbers that are really more interested in like revenues and expenses, they really did not impact them at all. And certainly not net. So we did not make any significant.
So these are reclassifications,
They're
basically.
basically reclassifications, yes.
Sometimes in my mind, audit adjustments has something to do with findings sometimes, but that's not the case here, correct?
Definitely not findings. They are reclassifications to, not just from an account perspective, from a different line on financial statements, but again, they don't impact like the main categories of the balance sheet, like assets, liabilities, fund balance, revenues, or expenses. Yes.
The classification of sale of capital asset for $6 million, is
Yes.
that the Andrew Johnson building sale?
That's correct. Specifically in this case, it was treated as regular revenue, and for general revenues, and for a governmental report, it needs to be reported as other financing sources. Still washes through in the same manner, but it was reported. We just reclassified it, as Jim would say.
Okay, thank you.
Yes.
Commissioner Schoonmaker, are you number 9 on the screen? I can't hardly see these little red lights when they come on.
normally have a little card that tells our name, and these lights don't work anymore.
Right.
It's just this on.
Well, I had trouble seeing the other lights, so just interrupt or whatever if you need to, if I don't see you, so. All right, Ted.
Any other questions on the governance letter? If not, I'll proceed to the single audit compliance report. And I'm going to go over basically the layout of the report. We have 2 reports in the front that cover the first 5 pages. One deals with internal control of financial reporting and compliance, and the other deals with testing, basically, of major programs that we select. And if we had any findings, and in either of those reports, they would be listed in the findings in the back of the report, so we'll go over them shortly. Otherwise, it's the standard format you'd expect for those 2 letters. As information on pages 6 through 13, that lists out all of the federal grants that were awarded, expended basically, by Knox County and Knox County schools for the year. Pages 14 through 16 list the state financial assistance or state grants, also for the county and the schools. Particularly on the federal grant area, they're listed by U.S. Department, so that should help locate certain grants. And also, the county grants are listed first, and the school grants follow that. So, obviously, a lot of federal funding and state funding, for that matter, run through the report or run through the county and the schools, and here's where they are listed for reference. With that said, I'm going to move forward to the actual findings themselves, which start on report page 19. Or actually, 20, let's see. Report page 20, I believe. We're labeled at the top, Section 2, Financial Statement Findings, 2023-001.
Ted, could you go back to the page before that where you talk about?
Yeah, certainly.
Whether or not these are material or significant weaknesses?
Yes.
You know,
In this, there is a chart here. This is a summary schedule of findings and question costs. As noted, there's two different sections here, one for financial statement matters and other for federal awards matters. We did not identify any material weaknesses. We did identify significant deficiencies. Since we had significant deficiencies, then that's why that significant deficiency box is marked in the financial statements. And as well, on the federal awards, the exception was noted in any auditing findings. Any audit findings disclosed are required to be disclosed in accordance with CFR 200-516A. So, it also on this page, it lists all the grants that we tested as major programs under program name section. And it's still during this year, it was dominated by COVID grants. And the reason for that is, one, COVID grants were considered high risk by the federal government in large part because, one, they were new, two, the guidance for those came out sporadically, often after they were spent. So that obviously makes it higher risk just inherently. We also looked at child nutrition cluster and the CDBG grant.
On the COVID ones, I guess also maybe some of those weren't in play last year, so if any of that was new this year, finally coming through, that would have a reason for you to look at it, right?
Many of these actually were here a year ago. I
Okay.
can't remember if all three, I think all three of them actually were. But the fact that, and ordinarily when you test it 1 year and you don't have findings, you would not have to test it again.
Right.
The difference here is if a grant is labeled by the federal government as significant risk, then we are required to test it. So, and that I think goes back to just, the uncertainty about rules in place and the newness, and there were a lot of exceptions in other places regarding those grant funds.
Do I see a light on? Go ahead, Matt.
Yeah, I just wanted to make sure we had a moment for, especially the commissioners, for significant deficiency. I know it's noted there, and I know it gets noted further on, but could you just give an overview of how that's identified and what that means?
Okay. Significant deficiency is basically explained as something that is not considered a material weakness, but is generally an internal control deficiency that we deem important enough to make a governing body aware of. So, and in some cases, it might be an item that the state government or federal government would deem, in particular here, the state government and the comptroller's office would deem important enough that we need to share with the governing body or the audit committee in this case. And there were a couple items in here that I would consider that, irrespective of how we would consider them, the state government, state comptroller's office would want reported.
So at some point, I can't remember, but it's been a few years. Material weakness at some point can cause you to have to do more audit work the next year. Do I remember that?
There are two factors. You are correct. If we had a material weakness, it impacts that last line on this page. Auditee qualified as a low-risk auditee. If low risk, you're only required to have 20% coverage of federal funds. If you're high risk, you're required to have 40%. The only headache here is that just due to the high-risk programs that are caused by the COVID designation, I believe we tested over 40% anyhow, but that was just because we had more high-risk programs than we've had pre-COVID.
Any other questions on this page?
Just to be sure, when we go through the findings, it'll be laid out which ones are significant deficiencies, right?
Basically, 1 through 6 are significant
6,
deficiencies,
okay.
yes. And number 7 is a federal grant finding. Okay.
And Ted, since we've already interrupted you here, can you
Yes.
give Commissioner, Mr. Larson, Jay, where we are in your documents there?
Commissioner Jay, we have gone through the governance letter. We are in the compliance audit report now, and we're just about ready to start going over the individual findings, which are start on page 20, report page 20, so I'm not sure which PDF page it is. And this will be finding number 2023-001. And as we go through these findings, just, I guess, a prelude to them is we're reporting more findings this year, a few more findings than typical. We have 7 in total. It should be noted that 4 of these findings were findings that were reported last year. And in some regards, that sounds bad, but it's not as bad as it sounds because none of the findings from a year ago are completely uncorrected. We've labeled them as either partially corrected or basically required to report again because of other factors. And I'll explain that as we go along. So there are 3 findings that are completely new and 4 that had some similarity to a year ago. The first one being bank and liability account reconciliations and timeliness of receipting. The first 3 here were reported in similar fashion a year ago. This one's one of them. And in this case, in each of the findings, the finding or the issue basically is laid out in the condition section. You have 5 or 6 sections here. You have criteria or specific requirement, condition, cause and effect, recommendations, and management's response. But the crux of the finding is generally in the condition section. And here, we noted that, in particular, related liability accounts of the trustee's office had 5 or 6 different matters that we came across, which are outlined in the condition, really related to reconciling liability accounts and certain reconciliation differences that we encountered. Some discrepancies in the prior years have not completely been resolved yet. Bank account reconciliations performed but not documented as reviewed by someone other than preparer, and some certain testing discrepancies that we had. Now, when we're talking about liability accounts, bank accounts are balanced, they're reconciled. What happens is to finish the reconciliation for the trustee's office, they are holding the cash, but the cash really belongs to a department or a fund, really a fund. And if receipts come in and they're not identified, with that receipt, how it should be coded, then that creates a dilemma for the trustee's office. So, and that's where these reconciling items are coming from. So it's not the bank account. Bank accounts are reconciled. They know how much cash they have, very good controls over that. It's identifying these loose ends and, think about how many transactions occur within the county in a month. And that's really the challenge here. And, well, go ahead.
Yeah, let me go back to, because when this was discussed last year, if I'm not confusing the findings, this was one that there was some concern about the reconciliations, there was concern about how they were going to fix the reconciliation process, possibility of using a program or something from the bank, would that work or not? So I know there were some questions there, and this is a kind of a sidebar to the findings. And then also, there was other questions on whoever the vendor was that maybe did we ever get any recourse out of them for, I think at the time we were thinking they didn't fully deliver or deliver as much as they should have. And so do you know anything, what the status of those?
I'm not sure about the status of the matter with the vendor. I think it's been resolved, but I'm not positive. Someone from the
Is there
county
someone
could probably
here
better answer
from the
that.
trustee's office? I can't see everybody back there.
Or it could even be, finance might be able to answer too, but either or. From the vendor perspective, I'm not sure.
I just can't see back there to know if we have anybody from.
Remember the vendor issue?
I think ultimately, Tyler, which is who does our accounting system and ERP as a whole, them or the bank don't offer any type of reconciliation software that works.
Right.
And so ultimately, I think what we have is what we have. We continue to see if there's anything on the market for such a thing, but we have so many accounts. I think that's what makes it more difficult.
Do you know anything about any recovery, Chris, with the vendor on the system?
There's nobody here from the trustees, or are they sitting in the back?
I think there's somebody here from the trustees. I can't see in this background there. It's hard for me to see faces, so.
Just ask out loud.
Is there anybody here from the trustee's office that
Yeah,
can
we
help?
got Robin here, and
Do they not want to appear?
now I think, are you referring to eGov, I'm assuming, the collection software, is that?
I think so, yeah. Because that was a big issue last year, and more just because it delayed a lot of, the
Yeah, there
information.
was delays. I don't know if we ever recouped anything. We can follow up and find out. I know that Justin is in Nashville at a conference, and Pearl is sick and she can't be here, so we'll follow up.
Okay.
Yeah.
Can I ask a question on the
Oh, I'm
first
sorry,
page?
yes.
Thank you. Thank you, Mr. Chairman. So on 001, can we assume that the finance department, this was the first time this issue occurred, but with the trustee's office, it was more than 1 year?
Basically, I think as we dig deep into the situation, I think both the trustee's office and the finance office, what I am encouraged by are trying to work together to resolve it. So I think there's a resolution. There has some of the reconciling items from a year ago have been resolved, but not all of them been resolved. There's progress made. There's communication that's increased, and I think there's some encouraging signs for that. I don't know that it's going to completely go away, but we'd like to see less open items than we currently do.
Okay. Thank you.
And guys, for your information, there's a page 27, a few pages back, that does, kind of like we did with the school funds, findings from last year and their status. That gives you an overview. All right, Ted, you through with that one, or?
Yes, unless there's more questions. Okay.
No.
All right. Finding number 2 deals with the governmental law library issue, and we reported this a year ago. And upon the state investigative report that came out, this was one of those matters that the state would have expected us to put more information in this year's report. So that's why it's here this year, and it should go away next year.
So you were too nice to us last year, is that?
Well, it wasn't so much being too nice, it was a matter of investigation was still ongoing and some things were not public at that,
I think that's
the
right.
state needed to finish their investigation before we could say more.
That's right. I remember now they were in the middle of it, or,
Yes.
because I think they took it over after the county had already made gathered a lot of information about
Yeah.
it, so.
In the end, I don't think they reported anything that the county had not identified on
Right.
its own. But we were cautious to say too much or too little just from the standpoint, with the investigation ongoing. So we made,
Okay.
our finding more so was making aware of the situation pending.
So the amount that was paid as unearned compensation, was there any recourse on that, or is that just, we had to let that go, or how did that get resolved?
I don't think there's any recourse on that unless there's any legal action that can be taken.
No, and I kind of agree, knowing the situation, that the supervision of the whole thing was kind of up in the air, and what were the instructions given and all that, so. But I just didn't know, where the state landed on all that. Okay,
Okay.
any other questions on that one?
Finding number 3 is capital projects budgeting for the school construction fund. And this was an item last year, and basically the schools took a stance a year ago that the cost-efficient corrective action plan would take 2 years. So since it's taken 2 years, it wasn't resolved as of June 30th of '23. It was resolved shortly after that. So this is not anything new, but since it still was in play and there still was expenditures in excess without a budgeting funding source during the year, it has to be presented again. And this is a finding that will go away after this year.
So of our significant findings, significant deficiencies, I guess, so far are the first 3 significant, or items 1 and 2 considered significant?
All of them are either significant deficiencies or compliance deficiencies. So
Okay, well,
they are, and I don't have that page with me, but on those 2 reports in the first, basically in pages 1 to 3 of the compliance report, there's one section in the front that identifies which ones are significant deficiencies, and then the compliance section which identifies which ones are compliance.
when we asked a little bit ago, would we be able to tell them when you went through these? I don't know if that's what you were asking about, Commissioner Schoonmaker, if we'd be able to tell which of these were deficiencies, or maybe that was Matt, I'm not sure, but it's just it's not coming as clear to me without having to go look it up.
Okay. 1, 2, 4, and 5 we consider to be significant deficiencies.
Okay,
Issues of noncompliance were numbers 3 and 6. And that's also identified on page 2 of this report.
great. Okay,
Okay. Going on to I'll go on to number 4. Bank reconciliations in clerk and master's office. Due to personnel turnover, it was noted that bank accounts were not reconciled and month-end close procedures not performed from September of '22 through March of '23 until the finance department began assisting with these reconciliations. As a result, Clerk and Master's Office did not have current financial information available during much of the year. And excess fees and commissions payable to Knox County were not calculated and made until after the end of the year.
So it's just timing differences on these?
In the end, they've caught up, I believe, with the reconciliations, and certainly the excess fees were paid, so for the most part, it's a timing matter.
And you said, well, where's my sheet?
There always are dangers, though, when you're not reconciling on a monthly basis.
So we said, so, okay, that was a deficiency, significant deficiency. And was that last year also, or?
No, this is a new matter.
Okay, for some reason I thought I remembered that. Maybe it came up during some of the other meetings or things we discussed in this past year.
Yes, we evaluated and looked at, in conjunction, in working with the Finance Department, the situation during the course of the audit as well. So we were made aware of it, and we helped evaluate it. Okay. Number 5, then.
All right, and you're okay with the management response on this one, on item 3?
Yes.
I'm sorry, I'm looking for
No,
the page.
that's perfectly fine. Yes, I am, because,
And I'm laughing because I was looking at the management's discussion for item 3, and I was going, that doesn't make sense, so. I'll get on the right page, and it makes more sense now, so, okay.
the judges overseeing this are very involved in this and
Good.
want it taken care of, so,
Good.
yes.
Good.
I actually was very pleased with their attention to it.
Great, great. And is someone here from the Clerk and Master's office?
Good afternoon. I'm Scott Griswold. I'm the Clerk and Master of the Knox County Chancery Court.
Hi, Scott.
Did you have any questions or just?
I just didn't know if anybody was here, but they seem comfortable with what you all have done. Is it pretty much under control now?
It is. We've corrected all of the issues. We've hired some new personnel to oversee all of this. And when we came in and identified the issues, we took it seriously and got it knocked out as quick as we could.
Great. I appreciate that. Any questions, any comments? Okay.
Thank you.
Thanks, Scott.
Okay, number 5 deals with approval of fraudulent checks. Finance informed us that approximately 50,000 of checks written by third parties were presented to the county for payment. They were initially rejected by the bank because they were not on the positive pay list. Finance Department has a process where an employee looks at those checks to see whether they should be approved or not. They had an employee who carelessly approved these checks, and as a result, they cleared the bank. And the county's in the process of trying to recover funds in this matter.
Okay, so the bank kicked it back first, and then we let it be resubmitted, is it, or?
What happens
work?
is checks that clear the bank, for the bank to clear them, they have to be on a positive pay list,
Okay,
approved vendor list, basically.
okay.
And it's common for there to be one-time checks or infrequent checks that would not be there. So then it's up to the county finance to go through and
Right.
carefully, meticulously look at and approve the ones that should be approved and not approve the ones that don't, because there are schemesters out there, so.
Now, I see the word fraudulent checks, and to me, that kind of has a different meaning than if somebody just, didn't have the money for the account or wasn't properly registered as an approved vendor. I mean, in which case, the money should have been recovered at some point. But it sounds like we haven't gotten all this money back yet.
I don't believe so, but
Hey, Perry.
Hi, Perry Benchoff, Knox County Finance. That is still under the Knoxville Police investigation, and they're still working towards it. I doubt we'll see it, but we have not recovered anything at this point. But it is still an active investigation.
Okay.
Can I ask you a question when you're
Sure, go ahead.
Perry, so I'm kind of familiar with how that works. So the bank red flagged the check amount, and then the employee went in on the computer screen and said it was okay to approve that check.
Basically.
Were these checks going to out-of-state entities?
Actually, some of them are local, and that's why it's a Knoxville Police investigation, because some of the addresses were actually in Knoxville.
Okay, and so how long ago did this occur?
That was about, was it last October? The year before? But yeah, it's been a while.
So it was 22,
No, it would have been in '23.
23? Okay. Okay.
I can't remember the exact
Okay,
time it happened,
okay,
I'm sorry.
okay.
But yeah, it's kind of unfortunate when this, one of our individuals just didn't.
Yeah.
Unfortunately,
And you've had none since this was first discovered, none being approved as fraudulent checks since that time period?
No, because we have a new person involved in that now.
Okay.
So
Okay.
that kind of was removed from those duties.
Okay. Thank you.
Sounds like a beer board type question. Go ahead, Matt.
Do you know how many checks there were that constituted that 50,000?
I don't remember the number. How many checks? About 6 or 7, Perry said.
How many are they running? I don't know how many are on that report each day, just to give it some context. Just how many checks get flagged on that report, daily, weekly, monthly? I don't know how it tracks it, but.
Normally, there's not too many that get flagged. It's very few. And this just happened to be an occasion that these got flagged and the person just didn't do their job. Simple as that.
Yeah. And it's kind of a situation where there's only one person approving it.
Well, there was at that time. Now we've kind of put a few more controls in place where there's secondary looks at them too.
So when it says the supervisor will act as a backup, that's really a secondary approval.
Right.
Okay.
If anything comes through now that's flagged, there's going to be, a supervisor's going to take a look at them also.
Okay.
So but nothing has happened since this occurrence. So-
That's helpful. I read the response as backup being if they're not there that day. So. I
No,
guess that's-
no, not necessarily. And like I say, it just doesn't happen that often that some of them get flagged. Most of them are on the list, and they run through just like they're supposed to. So the controls are in place, they just didn't work at that time.
Yep.
Human error.
Hey, Perry, of the
Lowest common
of the six checks or so, were they from the same company or were they different vendors? Or could you tell, was there any relationship to them or?
I don't think there was a relationship. It seemed to be, as far as I can remember, they were just all individuals, not necessarily companies. If I
Okay.
recall. But just,
Okay. Any other questions on that item, guys? Item 5? Okay.
Okay. Number 6 deals with improper use of school equipment, basically personal use of lawn equipment and other equipment, and then eventually was identified as stolen, and report was filed. But anyway, improper use of school equipment, and this is another matter that obviously something like this is what the state would want to be made aware of and governors may be made aware of. So, any questions on this circumstance?
Now, this, I'm looking here, did the state get involved in this one? Did they take it over?
Not to my knowledge, but KPD is involved in it.
Okay.
I was just saying, so the equipment was not returned to Knox County Schools then?
That's correct.
Okay, thank you.
Matt, you got?
Yeah, I was just going to point out, the way it reads there, it feels like it needs to say that it was purchased with county funds versus just the employee purchased. That was the part that I just wanted to
Okay.
make sure, because how did that
The-
employee then have the
It
ability
was
to use county
purchased
funds?
with school funds,
Yeah.
yes.
So did that go through the proper approval process?
Yeah, so he must have gotten approval to buy it, and then he just took it home.
Yes. That's what
I got,
happened.
okay, so it was a legitimate purchase.
Yes.
But then misappropriated, I guess would be.
Yeah. I believe it was, if I remember correctly, it was a track timing equipment.
I don't remember having heard about this one before. Usually we sort of get y'all informed us, or we get informed as these things are happening, so I know. Okay, well, that's fine. I just, that one, I hadn't heard that one.
And part of the issue there, and I apologize for that, is we were originally going to put this in the internal school funds report, and it was in the first draft of it. And then we realized it really is more of a central office matter than internal school fund matter. So we moved it, and as a result, we almost left it out of this report accidentally. That's why it's number 6 here. But, so, it slipped our mind for a little bit, but then we remembered that we had deferred from the internal school funds report and put it in the compliance report for Knox County.
Well, I agree with not putting it in the schools report,
Yeah.
so. Okay, thanks.
One
But that's
quick
when it
question.
came up, when we're doing the internal school funds audit, for instance. But of course, you know, you have matters that are central office matters that come up at that point in time.
Because you say that happened, I guess they caught him on camera with one issue of taking something home.
Yes.
Now, I don't know how they found out the other one, but that was, and I see now where you've got the police report was filed, okay.
Yes.
I wanted to ask Ron McPherson if there was basically, is there somebody in Knox County Schools that follows up with the Knoxville Police Department on issues of this nature?
Yes, sir, that's correct. Now, once it's turned over to law enforcement, then at that point, they're taking the lead. I can tell you this employee no longer works for Knox County Schools, obviously. So it would, the course of action would have been a report, right? There would have been, appropriate human resources follow-up to that. With respect to the investigation itself, once it's turned over to law enforcement, then obviously, we would be informed of certain things, but they would be taking the lead on these types of matters when there's
Okay, but
alleged
no
progress.
one at the schools checks every month with the Knoxville Police Department, say, what is the status of this case?
Well, we have an investigator on our staff, right, that works closely with the police department and also with the sheriff's department on matters like this.
Okay.
Yeah.
Okay.
Yeah,
So
one dedicated specifically.
there
an
is
investigator.
follow-up then?
Yes, we
Okay,
have an
okay.
investigator. It's a part of our human resources department that's
Okay.
very instrumental in issues like this. Yeah.
Okay. Thank you.
Yes, sir.
Okay, then finding number 7, and it's in a separate section because it's the federal award finding deals again with the Emergency Rental Assistance Payments Program. And we had a matter a year ago where fraudulent payments were
Right.
made to an outside source. This time, there were payments made to internal personnel who created and approved fraudulent applications to the program. So the fraudulent disbursements appear to be approximately $154,500.
What is the internal personnel? What is, I mean, internal to who?
Employees,
No, I mean like Knox County or somewhere in,
yes,
okay,
yes, Knox County.
okay. Okay. I think I remember some. sort of-
So was that in our community development department?
I believe so, yes.
Oh, I didn't know if you had a question. You didn't have a comment, did you?
It was identified internally and addressed, but as well, how the program's set up makes it a little challenging to identify that ahead of time, but
Sure.
they have made, that program has made put additional safeguards in place to monitor a situation, potential situation like that as they've identified in their response.
Because now last year, I think the thing that, the get out of jail free card that I think they got was because it allowed for it to be self-report or the self-certifying.
That's correct.
And was that the case here, or was that, had already been, the safeguard been put in to prevent that? Or to monitor that?
This happened after that. I think those safeguards were in place, but it was a matter of internal, well, yeah, departmental employees knowing how to set up and follow through with a claim, with an application.
Was, and also, I guess from last year, there was really no recourse, or we didn't think there was. We weren't optimistic, because, just trying to figure out, did we mention whether or not that's been recovered or not?
I'm not sure of the legal status of this. Do you know, Chris?
When Chris is sitting behind Ron and you turn and look, I'm wondering which one's going to answer. I don't remember hearing about that.
Making sure. So yeah, this incident was related to, through community development with payments through CAC. And so I think that's how it's kind of internal in that regard. And so I think it's still, from my understanding, it's still being investigated. So there's no restitution yet. We'll see what happens.
So
But
we just don't know right now, but somebody's chasing it.
yeah, ultimately, I think when they were confronted, they kind of said, yes, we were involved, and then how does it go through that process? Yeah.
All right, thanks.
So, in other words, there was collusion in this situation,
And so that didn't.
internal.
That wasn't considered a significant deficiency. All right.
Well, in this case, it's considered
That's under the federal, no.
yeah, it's a federal award issue, federal program issue.
So that's the one that says, where you got a yes check for any audit findings described in CFR 200.51, whatever?
Correct.
Okay.
That's what it comes under, yes.
Okay.
And we considered it also on page 4 as a instance of noncompliance in accordance with the program.
Okay.
So those are the findings that we have. As Chair said earlier, on page 27, list prior audit findings and current status or reference. And corrective action plans follow that. And that's your report. Any other follow-up questions?
Hold on a second, just, so item number 3 was, trying to look at the management responses sometimes that are filed in the back don't always seem to match as much what's listed on the detail pages that we just went over.
And they don't have to match. You would think they'd be congruent, but they don't have to be exact. Because sometimes a corrective action plan will go into more detail.
You know, I guess, the one I was looking at is, no, I'm sorry, that's the budgeting, I mean, that's the capital one, I think finance just funded it to take care of it. That was the only one I think I had a question on it wasn't any of the money we were missing that finance funded, it was just that capital item. Okay. All right. Do we have any more questions on, do you have any more questions on this report, or we're moving on to the next?
Yeah, I just want to make, we are moving on to the next, the state audit contract and addendum. Is that, are you covering that or not?
That's
Oh,
next,
okay,
yes.
gotcha.
Okay.
Yes. I guess as background, basically, this is the state audit contract that's in the state's format that has our addendum. It has been reviewed and approved by county finance, the law department, and purchasing. So, and at that point, we are presenting it to the audit committee to present to commission.
And I'm finally, after a few years here, it's starting to sink in how this works a little bit, because a few months ago, we said we're not going to rebid. That took out procurements. Otherwise, they'd been going down a different path, you know, to bid this and everything.
Right.
So that then was an approval. It wasn't, I guess it was an approval, but just saying we weren't intending to go out for bids. And then, so now it's coming along, and as I understand it, this is really an addendum for us. This is an addendum to the contract between us and Pew, right?
Well, the addendum is basically our language that's required by professional auditing standards.
But I'm talking
accepted
about from
auditing
the
standards.
contract
The
standpoint.
state contract is required by the state of Tennessee. That is not our form, it's the state of
Right,
Tennessee's
right. No,
form.
I realize all that. I'm just
Okay.
thinking, sort of putting the pieces, trying to remember how this works, is that
Yeah.
it's really the three pieces there, and it's being put together. And so now it's up for, I think I remembered you saying that the state won't, do they still keep draft on this pages? Yeah.
Yes, the draft will not come off. The
Until we
state's,
sign and you sign, right?
correct, the state's draft stays on through their program until it's a tri-party agreement between the county, the audit firm, and the state, until all three sign, then it comes off.
So let me take this a step or two further. I'm just getting ready to make sure clear what it is we're going to do, you know, have a motion on. So this will be for the, really, it's going to cover the period of April 1, 2024, and ends March 31st of 2025. So, and I understand how we did all that to, you know, keep it a full year, but to have you all available under contract to us a full year. I think this is the second extension of that contract. Does that sound right, of our contract?
That sounds correct. I know we're still under the extension period, or
Okay,
annual
so-
extension evaluation period.
And this just has to be signed, I guess, by the mayor. There's a page in here for the mayor to sign. And maybe somebody from the law office. All I'm trying to do is, I don't think that, we're not signing anything here. And all we need to do is then just approve it.
We have to vote on it.
Yeah, I think it's just a vote from us that gets
Right.
it sent to the commission as a recommendation.
So what I'm looking for is, can we, see if I'm saying this right, Ted, can we have a motion that we approve the extension of this contract to cover the April 1, 2024 through March 31, 2025?
That's the performance period. It covers the financial audit for the period of July 1st, 23 through June 30th, 24. That's the period that we're auditing, and the period of the services really is April 1st, 24 through
Right.
March 31st of 25.
And I'll second that. And then
Motion
do
to
we-
approve.
And do we need to include that it's for approximately $358,500?
That doesn't hurt. I don't know if that's,
Or we can just approve it
We're just
and
approving
send
the
it on to
extension.
commission?
Yeah.
yeah.
Motion to approve.
And second.
And one more item of discussion, when, is this going to go to county commission?
Next month.
Next month? or-
April.
Oh, so it'll be in
yes.
April, okay. All right, so we have a motion and we have a second, correct? Yes. All in favor, say aye.
Aye.
Opposed? Ayes have it. I think that's it. Ted, are you through?
I think so.
Golly, we let you, oh no, we got to be out of here by 4:30, so.
We left Zach a little bit of time.
Yeah, Zach's got 30 minutes.
All right, thank you.
Thanks, Ted.
Zach Fullerton, Knox County Internal Audit. Good afternoon, Audit Committee. Hope you're all doing well. It seems like we were just here for the February meeting. I know how much you guys love seeing me, so I understand. All things considered, got a pretty short update, so I think 28 minutes should be plenty. In your packets, I'll start on page 2, which is the list of ongoing projects. First, of course, we've got the fleet management project. Richard and Spencer are really at the finish line in terms of the field work. I think I've got it there as status in field work. Really, it's over. Field work's done. We met with Chris Caldwell in the law department earlier this month. We had a really, really productive conversation. I think we're going to be able to bring some really significant positive changes to the county in this audit. I think as it stands now, management's on board with updating the fleet management policy, bringing it into current times, and we may actually also have a recommendation in that audit for county commission to update some of the Knox County code, sort of bring it in compliance with our current practices. So I think it's going to be a really positive audit. We'll see how things shake out in the drafting process. But either way, it will be the next one to close, and we'll have it for discussion in June.
Do you think those recommendations that you're talking about will be part of the audit report?
Yeah, they will, yes, sir.
Well, good luck with those.
Thanks. Next is the Knox County Sheriff's Office IT inventory audit. We were able to get through planning really quickly. I think we know exactly what we want our testing to look like, how we're going to tackle it. Richard's already sort of pulled the testing samples, some of them. Lori will be reaching out to the officers to confirm their IT inventory. So Captain Aaron Yarnell is in charge of that division, and I just wanted to give them a shout out. When we showed up, our first face-to-face meeting, he had like a binder put together in anticipation of our audit with lots of documentation and everything he thought we would need. So, you know, it's always nice to see that when you show up for an audit engagement. But anyway, we're making good progress there, and the plan is to have that to present to you in June as well. Third is the fiscal year 25 risk assessment. You know, started that project. Really, the first thing I did is sort of sit down with Jennifer Bodie, the budget director, went through the budget, trying to understand all of the different departments, their functions, who the contact is, want to make sure that I don't miss anybody. Then started to put together some questionnaires to have those conversations with the department heads and their financial representatives. Sort of a daunting task when you think about how many county departments there are, how many layers there are at the school, how many layers there are at the sheriff's office. But certainly, you know, I'll be talking to the people who have the most impact, who know the risks the most, and can give me the best information. Keep in mind, there won't be an audit report that comes out of that. It will feed the fiscal year 25 audit plan. So just to keep that in mind. Last is the schools fleet management. I still want to get this started soon, but really just boils down to staffing. When we can get a new person, we can sort of dedicate them to this project.
So is this one the school fleet?
Schools fleet, right? and-
Versus the first one that was, is that Knox County or?
Yes, sir, just general county for that first one. It's two different governance models, and that's why we split that up, as well as the sheriffs at three really separate entities.
I don't guess those will really merge the two. I guess they've got too much to stay separate. Well, that's a question.
Yeah, not really. I mean, they have separate policies, so if we make a recommendation to update the county's fleet policy, that will be separate from the school's fleet policy. Once we get the regular fleet done, Spencer will free up and can likely work on this as well. I did want to note that in the last CCFO meeting, I was talking to Jennifer Himmelgarn. She's one of the assistant superintendents. She indicated that they are already making some improvements to the school fleet because she knew it was on our radar. So I think that's a great thing. I think it's a proactive approach. I like to hear that, just the thought of me showing up can create change. So always good there, right? If you go to our next page, you'll have the closed project. Since we last met in February a few weeks ago, we closed out both of our CREs, the Knox County Health Department fee collection, and then the non-departmental account. So just bear with me for a moment. We'll get to that on the CRE page.
Okay.
If you'll go to that next page, page 4 of your packet, general updates about our office, first staff news. Just wanted to let you all know that Richard, he just crossed his 4-year mark with the county and with our department. He's going to be taking over some of the manager responsibilities going forward, giving him a little bit of a heavier load right now. He's also working through his certified internal auditor designation, so the goal is to, once he's completed that, fully move over more management responsibilities to him. We did post a lead auditor position. And I don't know if you guys know this, when you actually post a position with the county, it only goes on the county's website. It doesn't go to like Indeed or outside places. So I used some of our budgeted dollars to pay to post it on Indeed, sponsor it. Got a fair amount of interest. We interviewed one person about a week and a half ago, another individual yesterday. So, we're just working through it, the constant hiring cycle. It's always fun, but I do think we will find someone and just continue to grow the staff, even if that person, maybe they're not a lead, maybe they're an entry, and we bring someone in to try to
And
grow them
maybe the
internally.
county doesn't have enough reason to link to Indeed, but I thought Andrea had worked that out back when she had the tidal wave of trying to get people, and I'm pretty sure, I thought she got it set up to where, maybe that was just a one-time thing where they took it over there. But just do me a favor and ask them or unless you're certain already that.
Sure, yeah,
There's-
I'll
there's no
talk to
connection.
HR about it, and, I do think it would be a good idea for all of our positions. I'm so naive, I didn't realize that when you post it on Indeed and it costs money to get it to the front page or what, so there's a cost there, but not a lot of people know to look for jobs on Knox County government's website.
Right.
So, let's see, and then a quick update on the Dynetics project. That's our IT external auditors. It's moving along nicely. The system development lifecycle review, it actually started the day of our last meeting. They had a follow-up meeting last Friday. I think it'll be done soon. They have been testing on the employee requisition application. IT was actually able to set them up with a remote testing environment, which is great because it saves on travel costs, which saves our money. And I think everything's moving really well on that. They got the first finding to me about that app last week. I met with the IT applications director, Antoine, this morning to give them the heads up, and they're already making corrections. So, progressing nicely. And then 2 other quick items. I just wanted to mention that Richard and I met with our High Bond representative last year. So High Bond, if you'll recall, is our audit software program that we use. We've used it since about 2020. And High Bond's pricing is actually set up so that every year it increases by 8%, which seems fairly steep to me. As you can imagine, that gets high pretty quickly. The only thing they can do for us is to lock us in for a 3-year term at an escalation rate of 5%, a little more reasonable. So just wanted to make you guys aware. We'll work with finance and procurement to make sure that, that we're getting the best deal and we know what the best path forward is. We do want to keep High Bond. We like High Bond.
Good.
But we want to use taxpayer dollars efficiently.
Do they also track don't they help with the hotline?
They do. Our hotline runs through High Bond.
I think that's one of the things when we switched over a few, did you say 2020?
I think it was around 2020, yeah.
That sounds about right, because I know Andrea is working on that, and getting a hotline in there was kind of an important deal too, so, okay.
Sure. The second listed item there, it just wanted to note that the GAO, Government Accountability Office, just released the 2024 revision to the Yellow Book, which supersedes the 2018 version. So the Yellow Book is like our Bible, right? It's like a new Bible is coming out. It's very, very big news. It's obviously been 6 years since a new copy's come out. If you'll remember, last time we talked about the IIA updates, this is a little bit different. This is the Yellow Book that we are specifically beholden to in the
Right.
code. So just wanted to let y'all know, we're aware, I asked the staff and myself to do some training. We've got access to an online training program that'll talk to us about the new updates. I think it's mostly centered around quality control management from what I've heard, but
Yeah.
we'll make sure our operations conform well before.
I don't want to go into any detail on it, but you have a feel for what items are, you'll be targeting to comply with?
I honestly, from what I've seen so far, I think we are in compliance, and probably just a couple of tweaks, wording changes around that quality control process, which, that's what we do on the back end at the end of a project, a secondary set of eyes. You have the person who performs the work,
Right.
then the reviewer, then the quality control reviewer comes in on the back end to make sure everything is factual and correct. So, always new standards to follow. It's always fun.
I'll leave that up to you guys.
Okay. If you'll turn to page 5, so we get into the control risk evaluations. As I mentioned, we finished both the Knox County Health Department fee collection and the non-departmental CRE. In the email I sent to you last week, I actually included an just a one-page executive summary for both of those. I mentioned in the email, we have not previously created reports for CREs. I know it's just one page, but I thought it would maybe be beneficial for you all to have a little more insight into the project, just some background on what we reviewed, why we reviewed it, and then, of course, a breakdown on the assurance score. So, if there's any issues with those high-level summaries, let me know. But I think the intent is to utilize those going forward, in addition to the summary page that you get in your packet. Both of those reports are in the printed copies that you have at the very back of your printed report. So let me first talk about the Knox County Health Department fee collection. Lori worked on this project. I know we talked about it a little bit last time. We were sort of looking at 4 distinct areas: vital statistics, which is birth certificates, death certificates, things of that nature; the dental clinic, which provides dental services to community members; environmental health, that's air quality, groundwater, food program; and then, of course, we also looked at the health department's finance office, because once fees are collected and processed, they go to the finance office. So overall, we looked at 46 risks, 44 controls, only identified 5 gaps, and that left us with an overall assurance score of 89%. In my mind, that's a really strong score. The report itself breaks that down a little bit more into the different divisions that I just mentioned.
Mm-hmm.
I think the biggest area of worry for me was, I guess, with the environmental health division. We noted that at times inspectors for the food program were collecting fees in the field during their on-site inspections, which, of course, whenever you collect fees in the field and you have to transport it back to the central office, that creates an additional layer of risk that, hey, the money fell down in my seat, got misplaced. Not that permits could be issued before that money was returned, but just for the security of the funds, a little bit additional risk there, right? There was also a little bit of a segregation of duties risk that was simply just due to the limited amount of staff that the environmental health division had. We talked to Kevin Parton, the health department director, about these results. He indicated that they're already making improvements. I think they're actually going to almost completely stop taking payments in the field, or use it as an absolutely very last resort. We were talking before the meeting. You can imagine food program inspectors for like a food truck. It's very difficult because they move around, it's transitory in nature. So I think all of that to say, if we went back now with the things that they're already doing, I think you would see a higher score for that division. So
The score itself is, I guess, kind of the end of the ball game here is, it seems like you're pretty satisfied with what's going on, and this is in lieu of doing a full-fledged audit with all the other overhead type work you have to do with that, and just in the process of everything. So your recommendation essentially is, you made a few change recommendations, but and that's it, and they're taking care of them, and then, so they're in good shape as far as you're concerned, right?
Yeah, as far as I'm concerned, I think my personal recommendation from a risk assessment standpoint is we don't need to go back in and do a further review at this time.
Okay.
I think we don't make formal recommendations in CREs, but we do have those informal discussions, get some assurance from management that they are cognizant of the issues and willing to make improvements. So that's what we wanted.
So if you had one that you didn't feel good about, then you'd put it on the audit plan or something?
Exactly, yeah,
Okay.
especially if we know that problems are.
Have we had any of those? I know you've got a list of them that are on here, so we can go back a ways.
Well, school coupon books is always an issue that we've discussed many times. Difficult problem to solve, as we've heard about, but we may want to do some additional assurance work in that field. Clerk and master, I know they're here. We may at some point revisit them. But yeah, I think it is important to not, I want to give a little bit of graciousness to when they are making improvements, make the improvements, and then we'll come in and.
So this 43% assurance rating of the clerk and master, that you think that's improved already, or?
I would say so from what I have heard from talking
Okay.
during our meetings with Chris but certainly when I get into the depths of the risk assessment process for next fiscal year, I'll want to talk to clerk and master and try to analyze that situation.
Are they aware of any issues that you might be aware of that would help them, or that you would make it an issue in your next review? I mean, give them a hint of if you know something that would help them is all I'm saying.
Sure. Oh, for sure. That's one of the questions I always ask. How can we help these departments? We want to be a service department and have that mindset and make the departments we work with better. So, I would love to get more management requests in the future if someone sees our value and wants to use our services. I think that's really great. Last thing on that, and I'll try to be quick. I just wanted to, give credit to Kevin. Kevin Parton's always great to work with. Lori had really great conversations with everyone at the health department.
Is he here?
He is. Yeah.
Okay. I'm sorry, it's so hard to distinguish faces way back there with the background. Well, thanks for being here, sir.
Let's turn now to the second CRE, which was the non-departmental account. That's 101-6950 in the operating budget. If you want to go back and look at the budget for that account. Spencer completed this project. I assisted a bit. If you'll recall, there was some questions in our minds just about the expenses that hit that account. Just wanted to get some assurance regarding the accountability and transparency over the account. So as I put in the report, the account is really utilized for non-recurring expenses that don't necessarily make sense elsewhere or can't necessarily be, budgeted for at the beginning of the year. For me, the classic example that we heard was on the 6th floor, the city needed to do some HVAC work. I think it was repairs or maybe a full replacement. Their offices are very close to county payroll offices. When the HVAC work happened, it impacted our systems, so there was some needed HVAC work in the payroll office. Well, obviously, we hadn't budgeted for that on the front end, right? You don't know that that's going to occur. So an expense like that would hit the non-departmental account.
And Zach, I asked him before this started, is this just like miscellaneous that a lot of companies call this account? And that seems like what it is.
It is, yes, sir.
Okay.
I just wanted to switch it to non-departmental because that's what it's formally named in the budget that the commission sees. You also have expenses in there for things like commission designations, which obviously those get the additional layer of control that commission has to approve them. You have the legislative control there. Ultimately, this project was a little bit smaller. We looked at 9 total risks, 12 total controls, only identified 1 gap. It gave us an overall assurance score of 96, so really good score there.
Yeah.
No reason to go back in and perform a full audit, in my opinion. The only gap was just obtaining a second and sometimes the third level of approval just from the executive management side. So, make sure on those, we've got either Chris or Perry or Jeff Clark, Jennifer Bodie, someone at that executive level puts their signature on the expense and verifies it. But again, thanks to all of the finance staff who helped us. Their offices are located directly next to ours. I just poked my head in people's offices, probably startled a lot of people, but I got a lot of useful information. So that's it for the CREs. We'll turn in your packet to page 6, the hotline update. If you'll recall, we had one open investigation in our last meeting. It's since been closed out. It was a non-county issue, so no significant legwork there, but haven't really received anything new at this point, so a little bit of a quiet period. Did get a request from someone at the libraries the tail end of last week for the hotline posters, which, if you remember, we revised those, updated them back in October, so I still had people reaching out to get new posters. She needed like 20 of them, so I ran those over yesterday, and hopefully those will be hung up sometime this week. And then if you'll turn to page 7, we have our recommendations list. The only change there is that 3 of the open recommendations were closed out. These were related to the Knox County surplus audit. I think it was the 2024 January commission, where commission voted to update the procurement manual. Those updates were in response to these recommendations. So, happy to see that taken care of, fixing those issues that were identified in the audit. And I think that's it for me, but happy to answer any additional questions.
Any other questions? All right, that takes care of, where are we on the schedule? We are now right now our next meeting is scheduled for June on a Tuesday. It'll be at 3 o'clock.
Mr. Chairman, could we request that meeting be at, say, 2:30 so that we don't run into the issue where we're losing
Right.
a board member?
Right.
Actually, could I ask a question? Is there any reason why we can't do this meeting in the morning, like 9 a.m.? Because
You all pick the time.
it just seems,
Matt
afternoons are
and I don't
harder and
really
harder.
care,
They're harder for me, they're harder for him, they're harder for him. I just assume, is there any reason from any of our team that we couldn't do it at 9 a.m. in the morning and just knock it out? And
I don't know if I thought the city y'all didn't want them on Mondays,
No, not when we're doing meetings, but,
And so that.
or even, well, you could do it at Wednesday then, in case we have a late meeting on.
I just can't remember,
Whatever.
the city has sometimes here that's their time, but I'll ask, to find out if it's even open.
Yeah, just the availability of the room.
Like today, Matt's wife had a change, so his schedule slipped a little bit on him, and that's why he had to leave, so, okay.
Is Pew and Company alert at 9 a.m.? Are they ready to go and you can do it?
They can
All
do
right.
it. Okay, all right, so I'll check to see if it can be in the AM at 9. And that one's 3 months away anyway, so, but I'll go ahead and call Drew now. No other business? Or does have any other business? If not, can we have a motion to adjourn? All in favor?
Aye.
Aye. We're done.